A lot of us dream of retiring early. Imagine waking up at 45 years, not depending on your boss, a salary, or your children for survival. Just living comfortably with money coming in every month after month. Just living comfortable life, whether you are working or not. Now, many people think that early retirement is impossible in Nigeria. They will tell you, how do you want to retire in this economy? But here is the truth. It is possible. It's by building a dividend-paying portfolio. In this video, I'm going to show you step by step how to build a dividend-paying portfolio that can actually fund your retirement by the age of 45. I will explain what dividend portfolio is and how much you need to invest, which stocks you should look at, and the strategy that make it realistic, even if you are starting small. If you are new here, welcome. They call me Prudent Mom. I am an accountant with 15 years of investing in Nigeria. I've invested in any sector you can imagine with my little penny. So stick around, and especially if you are a beginner, stick around because I break down videos in a very simple terms that you will not have anything to be confused about. So let's get started. First, what are dividend paying portfolio? It simply means a group of stocks that pays you dividends regularly. Dividends are cash payments that companies give their shareholders from their profit. When you own a dividend paying stock, you are kind of setting yourself up for a passive payment or passive income. Passive income is the kind of money that you make that you don't need to work to make. You just put the money there and then the money will start coming in. So think of it like when you plant a tree like mango, you water it, you care for it, and then after some years it will start producing mango. The mango fruits are the dividends you get. So now, why focus on dividend-paying stock for early retirement in Nigeria? Simple, because they provide stable stream of income. Salaries can stop, businesses can fail, but a strong and a good dividend-paying company hardly miss any dividend. In fact, some Nigerian companies have been paying dividend for years. Examples include Dangote Cement, BUA Foods, GT Co, Zenith Bank, Total Energies, and a few others. Now, let's use a quick example. Let's assume that Zenith Bank paid a dividend of 5 naira per share last year. The 5 naira per share the dividend they paid, let's assume you have 10,000 share in your account. So that 10,000 share multiply by 50 naira, you get at least 50,000 naira to your account. That's passive income for you. That's 50,000 naira dividend without selling your shares. So, and their shares are not even expensive. It's still very low. No, now imagine if you have like let's say 100,000, 200,000 share of that and other dividend paying companies. Now, here is the big question. How do you build a portfolio that allows you to retire at 45? The first step is to set your retirement goal. You should ask yourself this: how much do I need to live comfortably if I stop working today? It could be 200,000, it could be 400,000, but let's just say 500,000. The second step is to know your dividend yield. Dividend yield is just a fancy way of saying how much do you get compared to the stock price, the stock price of the stock you bought. If a stock price is 100 naira and you get a dividend of 10 naira, that's 10% yield. In Nigeria, some stock dividend stock pay between 7 to 12%. Now, here is a simple formula. Required yearly income divide by dividend yield equal to how much you need to invest. So if you need 6 million per year, you have to divide 6 million by 10%. Or if you need 6 million per year, you have to invest 60 million naira, because 10% of 60 million will give you 6 million naira. What I'm trying to say is, if you invest 60 million naira, and let's assume that the total portfolio is paying you, they are paying you dividends of 10% per year, you should be earning 6 million naira per year. That means your expenses are covered. I know what you must be thinking. 60 million, that's too much. Well, you don't need to get there once. You can do this bit by bit. You can start small. That is where the power of reinvesting comes in. So when you invest the little you have and they pay you dividend every year, instead of spending the dividend, you have to reinvest it. Over the years, this creates a compounding. That means your money keeps multiplying. Let's say you start with 1 million naira. So in the first year, let's say you get 100,000 naira. Instead of spending it, you will reinvest it into a dividend paying stock. So next 2 years, you will not get that 100,000 again. They will multiply to 110 or something, depending on the rate. Over the next 10 to 15 years, your portfolio can grow massively, especially if you keep adding money. For instance, let's say you started with 1 million. Once in a while, you top it up. When you get a dividend, you top it up. You will be surprised how much you can make within the next 10 to 15 years. Another tip I can give you is to diversify. This money, you need to diversify. Don't invest in one company or just buy one stock. You can diversify this money, invest it in different stocks, even ETF, whatever. If a dividend paying ETF, you can spread it. Also, it's important that you focus on companies with good track record. You can check out the companies I said I trust for to be paying dividend for the next 20 years. You can check it out. And also remember that investing in stock comes with a high risk. Stock is very volatile. So things can go up, things can come down. That's why when you are investing for a long time, you don't need to look, oh, I bought this thing 100 naira. Now a share is now 50 naira. Well, I'm losing money, I'm losing money. You don't need to check out those things. You can just invest for a long time. That's why you can don't put all your life savings there. You can start gradually. And remember, you have to if you are building, if you want to be consistent, you can build the money, build it until it hits 60. So let's say you are 30 years, so that means you have 15 years to invest in this money. You can decide to make it monthly payment of how much you can afford. As you are investing it, any money that comes around that you don't need, you can still put it in there. And then when the retirement comes, if they are paying dividend and they pay, some of them pay twice in a year. So when they pay the first quarter and they give you the ones that pay up to 3 million, you can put it in mutual fund. That one will still be giving you interest while you withdraw it monthly for your monthly expenses. So in conclusion, if you want to retire early by 45, you need to start building your portfolio today. Check companies with a good track record. Make sure you reinvest your interest. Make sure you keep topping up the investment, and don't sell. Don't panic and sell when the price is going down. If this video was helpful, please check out my other videos and share this video with anyone that might be interested. And don't forget to give it a thumbs up and hit that subscribe button. Thank you for watching. Bye.